Quasar Markets Live, Jim Iorio, Chicago. I'll be in your town next week, my man. Halloween.
Good. Are we getting together at all or no?
I think so. It's a quick trip for me. We're gonna do the Ireland's playing rugby versus the Kiwis. So I hope the Irish brigade comes to town and beats up on the Kiwi. But hopefully do a Halloween partying too as well in your neighborhood. I think as well.
Sounds fantastic. I know. I have, I'm coaching basketball, so I know I have some obligations, but let me know when your schedule, when you know what it is.
Yeah. Excellent. All right, let's get to it. There's a lot going on, Jim. The markets, listen, I'm enjoying the trading side of this, but it's hard for an investor. What's going on right now?
So I think there's a couple really key things that have happened that are positive. Okay, we'll get to the negative sides too. But last week, when Jerome Powell came out and said that he was slowing down or stopping quantitative tightening sometime in the coming months. Now, if he does that, stopping quantitative tightening in the coming months ahead of expectations, the market views that as kind of a quasi quantitative easing. So it's a little bit easier situation for money. Okay, so then all of a sudden you look at the AI trade. So for years it's been, you go to NVIDIA and then you go to Microsoft and that's how you represent yourself in the AI trade. Well, that all of a sudden, those names have started to flatline. Has the market panicked? No, it's broadened out to things like AMD and Micron, suggesting to me that that trade's still alive and well. I think it's really, really interesting. And I'm not ready to give up the bull thesis yet, and it still keeps knocking against those highs. And from a technical standpoint, I want both indexes. When I say both, I mean the S&P and the NASDAQ. I don't trade the Dow. I want them both to go above those all-time highs, settle there, and then make any kind of further strength. And I'll probably be adding to longs. I've been hedged, and I've lost a lot of money on hedges, but I've stayed long this whole time.
Yeah, but what do you say to the people who say, well, this whole market's being held up by bubble gum and pencil lead, and AI is the only thing holding up the markets? And yet we've seen Amazon talk, they just failed at their cloud the other day, and you're seeing that Google saying their cloud revenue is down, and there's a lot of issues here that are holding the markets up that just aren't still here.
There's no question. So if you want to look at AI and you want to suggest that it's in a bubble, I'll give it to you. I'm not saying you, I'm saying whoever might. I'll give it to you. I say I absolutely think we're in some level of bubble creation with the AI enthusiasm. So what does that mean? It means absolutely nothing. It means, because a bubble can go on for 2 years. So if you want, the real thing you have to avoid is putting all your eggs in one basket for when that haircut comes. And I think I've talked about it with you before. I fully believe in a 30% haircut in the AI names sometimes in the next year and a half. I don't know when it's going to come, and I'm going to ride it out with hedges in place, take profits along the way, and hope that we're nimble enough at the time to see it coming. That's really all we can do. So yeah, is it being held up by gum and duct tape and whatever? It could easily be, but that doesn't mean it's breaking apart anytime soon. Which I will add something about the economy. We've suggested on the Unfiltered Investor for forever that the 60% of the people are in a recession and have been in a recession. 2020 and 2021 was the biggest upward transfer of wealth to the top, let's say 25%. And those people are still very aggressively keeping the economic numbers higher. So Are we in a bad way? We're absolutely in a bad way. Does that have to be indicative with a stock market correction? I'm not sure.
Yeah. Lately, I mean, trading for me has been absolutely wonderful. I've totally enjoyed this market because it's to me, Jim, is seasoned investors that we are and traders, that this market's buy the dip, sell the rips has been absolutely working right now. It's not been fun for the average investor who's trying to figure it out. So most of them are saying, hey, you know what am I doing wrong? What do they need to do right now to refocus that portfolio, refocus their trading if they seem to be off kilter right now?
Okay, so I will say what I do when I'm worried and things like this, because I don't, my license is in futures. I'm not giving any advice right here now, but I will say that the thing that people don't do nearly enough is to rebalance at regular intervals. If your stocks have gone through the roof and you're now in a situation where you're exposed to great financial harm, if there's a serious 15% correction, then you're probably too far over your skis. You rebalance. I know that's painful to people because nobody likes paying any sort of capital gains taxes. My accountant to me the other day says, because we were talking about a capital gain, he goes, can't you sell something at a capital loss? Like, dude, nobody has a capital loss now. Just what in the world isn't going through the roof? Everybody has capital gains on everything. And he's like, oh yeah, I guess that's true. So, but again, sometimes you have to pay. I sold out of some stuff the other day, and it's painful to me.
For me as a trader and investor, I expect to pay taxes because, quite frankly, I made money.
It's good, right? It's a good thing. Yeah, I don't like it, but it means you're making money.
Right. I think a lot of people don't understand that. Oh, I just don't want to pay taxes. I don't want to pay taxes on the money. Well, I mean, that means you made money and you got to rebalance it because you may lose that money that you made. So yeah, I get it. Okay. I'm going to ask real quickly. You've been talking about it for a while. Unfiltered Investor. Talk to me about the newsletter. What is it that you guys do that's everybody's so much better and so much different?
So by the way, the support we've gotten on it from you people who might be watching right now has been amazing. Thank you guys very, very much. Each week we do a macroeconomic breakdown, which by the way, the macroeconomic breakdown is about 30% of what we care about. And it's mostly just for fun to give us a backdrop of what's going on. Then Mike Arnold and Bob Iacchino use their proprietary technical system, which frankly, it seems like voodoo to me. And I can say this because I did not come up with it. I'm there to write the macro piece, and eventually we're moving more into futures where I'll give a lot of different futures trades that I'm doing. But right now they do a ton of equity trades, and their hit rate is going to over 70%. And it's not even if it was at 50%, it'd still be moneymaker. And I'm not trying. All these guys are DM like the greatest trader. I'm just saying Mike Arnold's system works like voodoo. Check us out at unfilteredinvestor.com. That's all I can say.
Yeah, and I got Bob's X.com handle there too, as well, for those of you who want to reach out to him as well. But Unfiltered Investor Newsletter, that link is up here as well. I'm putting it up there right now. Listen, Jim is one of the best on the planet. Chicago, knows futures, understands it. Click on that link, unfilteredinvestor.beehive. Get it. I mean, listen, the insights that I get from it, it tells me what's going on, what's in your mind. You don't hold back. That's the best part about it, Jim.
Yeah, I've never been a big holder backer. Right?
I think a lot of people don't realize that we just got to tell it the way that it is, right? I mean, a lot of people they look at us as talking heads and go, well, they're just pushing their book. And I don't think either one of us push our book.
No. This is the first time that I've been involved in something that's actually is a newsletter. I've never sold a service for 15 years. I've been on Twitter. I like the conversation, and I like having to justify the trades I'm making to myself, doing it through justifying it to other people. And I've always loved it. Over the last 6 months, we launched the newsletter. By the way, I love that too. And I love the support we're getting.
Excellent, Jim. I will see you right back here next week. Thanks for your insights, my man.
See you, brother.